At the sidelines of the 28th ASEA Annual Conference held in Kigali, we take you to a panel discussion on building a resilient African capital market and adapting to geopolitical risks and current economic wars. The panel features Celestine Wabukumba, the CEO of Rwanda Stock Exchange, Monique Sanzabaganwa, former Deputy Chairperson, African Union, Abena Amoa, the CEO of Ghana Stock Exchange, Joseph Rono, Senior Group Executive Director, CPF Group, and Regis Rugemashuro, the CEO of RSSB. This session is moderated by Selua Shakri. Let's listen in.
I will start with our distinguished panel here, close to me. Celestine, if you can let us know, obviously you being the CEO of RSE, but also the President of ASEA, you have a unique vantage point of linking African markets. Where do you see points where you would build resilience in a way that, that we can take some action points here?
The resilience actually has to start from why we want to be resilient. Why are we saying even about the resiliency? So we are being told the world is in trouble. Everyone is doing whatever they want, whatever they are pleased. International institutions are no longer credible, many of them. If the UN cannot protect you, we heard from our previous speakers, cannot protect you from the war we are having on the continent or across the globe, yet that's what they were established for UN. It was created to make sure that there is peace. If the Bretton Woods institutions are creating things their way, which are not necessarily helping what we are doing, we are left on our own. So the point is the resilience you must have, first of all, to identify what you have as a problem. And our continent has many, but they can be solved if we put our minds together and our heads together. Number one, we've been listening earlier today, but the whole conference is around resiliency to make our markets relevant. So the issue of problem, we have, I think, have three that we have to make sure that if we overcome them, our markets can be resilient. Therefore, we can be the engine of growth for our economies as capital markets players. Stock exchange and the capital markets should be playing a big role into that. So number one, I would say that we have an issue of every CEO here in this room of a stock exchange doesn't go to sleep. Outside South Africa, we were told even all the money has, I was wondering why.
In South Africa.
Yeah, all the pension funds, I don't know what Regis, and the insurance, you were not here earlier, all the money has moved to South Africa. Yeah, there is a reason. Their market is the biggest. They account more than 90% of our market cap. The $1.6 trillion we have, I think, in market cap, 90% is in South Africa. The money is there, fund managers are there. Where is that money coming from for the rest of us, probably, or the rest of the world? So that means, outside of South Africa, every single stock exchange leader or capital market authority CEO or management or boards, they are grappling with the issue of pipeline and products. We don't have IPOs. We have very few. Most of us, we are relying on government bonds, for example. That's number one. Issue of pipeline and products. Number two, that one is linked to the issue of liquidity. The less products you have, the less liquidity you're going to have. So all that, it gets again linked to the issue of low levels of savings. That means we don't have savings, enough savings. On average, we have what, 15% on the continent? Asian countries, when they were developing, when they were doing their miracles, they were saving at 30%. So today in Rwanda, I can speak for Rwanda, we are about 12%, something like that. And we have an ambitious idea of getting to 25% in the next 5 years. And in the current, and it's still 2. That's the national transformation agenda for Rwanda for the next 5 years. So there are some measures the country has taken to do that, but those three, people are not saving enough. which has made other people grow. So the pipeline is not there. We are not doing much companies, which brings us to the issue that was mentioned earlier about equity culture development. We have not developed an equity culture development. Everyone wants to do business in Africa, or they are always thinking about debt. Debt is okay, but the debt mix matters. Your gearing ratio matters. So most of our planning we have, it looks around those areas of borrowing. Borrowing is good, but the banking and all that, but we are not really utilizing the capital market. So how we make our markets resilient is to find solutions for those three problems I mentioned earlier. So I think I pause here and we continue later on.
Thank you very much, and obviously the participation of pension is something we will look at later, especially as we have CPF with us here, Joseph, today. But before I move on down the panel, I'd like to ask you, Monique, as a former vice chairperson of the African Union, in light of geopolitical tension as well as trade tensions that we are facing, and obviously with the Agenda 2063, if I'm not mistaken, from the African Union, how can you build resilient domestic markets that will obviously fuel growth on the continent?
Mm-hmm. Before I get there, quickly, I need to state the obvious, that Africa has to look inward for its true transformation. Because it's no secret to anyone that we have contrasts of plenty and deprivation living side by side for quite some time. Mm-hmm. And until we get intentional in changing our mindset towards being transformative, towards growing endogenous value chains, towards integrative initiatives, towards really being inclusive of our SMEs, of our youth, of our women, of our rural, and so on, then we are going to start there. The second point I want to make is actually that Africa has tried to organize itself, but what Dr. Kabirika was telling you is true. We have vision, we have frameworks. Name anything you need, we will have it. You know we have an Agenda 2063, which is in its second 10-year implementation plan, started 2024. And until 2033, we have to deliver tremendous growth, double-digit growth in Africa. Just try to imagine the gap from the baseline where we are at today. And we need to develop our corridors because we need to make our FCFTA work. Mm-hmm. We need to develop our agro parks. Mm-hmm. We need to develop our pharmaceutical manufacturing industries. Mm-hmm. We need to do so many, many things. And in that, we need to create jobs. Mm-hmm. If not, we are sitting on a bomb because our Gen Z are not just mm-hmm. going to sit mm-hmm. and wait for us. And the continent is trying to get organized. We have institutions that are coming up of age. Mm-hmm. We have the Auda NEPAD, for instance. We have our regional economic community secretariat. They are coming together to form what they call the Africa team. Mm-hmm. They have even a pipeline of investable projects that they have been keeping and trying to run around to mobilize resources. Mm-hmm. But I wonder, have they sat with the Association of African Stock Exchanges, mm-hmm. Securities Exchanges? I don't know.
Okay.
And we have our AMFI, the Africa Club, mm-hmm. your likes of Afrexim Bank, TDB, RTD, and others. They are now getting organized to play that catalytic role. My point is, we need now to really get together. We need to collaborate. Mm-hmm. We need to create that vision we have of that Pan-African stock exchange market so that this functional market is going to help us. And we have really all that it takes, but we just need to start thinking about long-term capital. How do we harness it?
So Monique, what you're saying is that at the highest level, you have obviously the ambition to, to have impact on the ground. But what you are saying is that there's a lack of, I guess, collaboration with the market ecosystem. Is that correct? I mean, can you say that correct? No, and because of that, you're not seeing much result. Is that?
No, I say that we have the building blocks that are waiting for a glue, that are waiting for that mindset of collaboration, breaking the silos, that are having a continental view. Because if we keep looking our inward market, however, even the South African market, it cannot survive by its own. I think the future tells us that we have to integrate. Because if we don't, then we are just simply going to be swallowed. And we have an unprecedented opportunity of these disruptions, just like a wake-up call, so that we can come back to our senses and try to do what we need to do. So I'm saying that we are on a good trajectory, but we need to accelerate the pace. We need to collaborate more. And we need our capital markets to do intermediation of the savings which we need to raise and also the long-term capital that we need for all those ambitions I've said of getting to where the Agenda 2063 wants us to be. We have a gap of $300 billion every year to raise, in addition to whatever we've been doing.
Yeah. Thank you very much. Obviously, acceleration of results through collaboration. Ghana Stock Exchange has pioneered reforms, and obviously in light of what Dr. Donald said earlier on, putting a stress on innovation, how do you see African exchanges leveraging innovation to remain really competitive in a global landscape?
Thank you very much, Selua, and thank you to Rwanda Stock Exchange and the people of Rwanda for graciously hosting all of us here. I'd like to take a minute to appreciate Africa's equities markets performance so far this year. I think together we are having a great year in terms of market performance on our markets. The Ghana Stock Exchange is up 76% in local currency terms so far this year, about 95% in US dollars. Malawi is up 260% so far, Nairobi up 63%, Rwanda is up 20%, Nigeria 32%, etc. So I think we deserve a big round of applause for ourselves so far this year. In Ghana, we've just launched our first IPO in the market, that of a big bank, since 2018. We've just broken the IPO glut in the market. Another reason to celebrate for us. But we have far to go. And we've realized that Ghana is doing well because of partnerships and innovations. So working with other regulators, we've gotten the NPRA, which is our pensions regulator, to mandate pensions to invest in securities listed on the Ghana Stock Exchange. And we are working with them to set minimum thresholds. We're working with the government to bring SOEs to the market. We are working with the banking sector regulator to mandate banks to list. Working with the telecoms regulator to get telecom companies to list, because we believe public markets serve an important role. That schism between the rich and the poor, democratization through public markets of access to investment opportunities is important. And that is why key sectors for us, whether they are in the utilities, they are in telecoms, they are in financial services, we think that policymakers must work with us to bring in public ownership through our pension fund and through our retail investors, access to investment. So what is the big thing that will help us grow? Political and regulatory leadership. We've come to Rwanda, barely any of us needed a visa to get here.
That is true.
Access to markets is great. if our political leaders are not going to move, I say as exchanges, let's work with the private sector and disrupt them. If our banks are not going to, if our banks were not going to let small savers open bank accounts because their requirements were too high, we got fintechs to disrupt them. We got M-Pesa, we got Momo to disrupt them. And today in Ghana, of a population of 34 million, there are 30 million mobile money accounts, which operate completely as investment products and savings schemes. So whilst our political and regulatory leaders are taking their time, I think us as stock exchanges need to pivot and facilitate cross-border settlements, because fintechs today provide those platforms, provide access to investments across the markets, as we are doing with our exchange linkage project, but we can't do it alone. And that is why the partnerships with both our ministries of finance, with our regulators who have to lead these initiatives, as is being done in Europe, the Savings and Investments Union of Europe, the capital market strategy of the US, what they are doing in Asia, etc. Where is that African component? And so either we go with our regulators and our policymakers, or we work with the private sector and we disrupt the space. And it's within our ability to do that.
Thank you very much, Abena. And obviously moving on to, I think she really set the tone for more participation from pensions. I guess that was into equity, not just fixed income and bonds. Can you tell us how can we grow the participation from pension into the equities market? Yeah. And how would you see that happening?
Okay. Thank you very much, Salu. Maybe let me just give these statistics to put it into perspective, perhaps looking at the regional market within East Africa. If you go to a country like Kenya, for example, Kenya is doing around 71% on government securities. That is pension or investment of pension assets. You go to a country like Tanzania, they are doing, I think, around 60%. Here in Rwanda, I think more or less the same thing, around 62%. You go to Uganda, Uganda is even quite high, almost 80%. So the question would be, why is it that pension funds are predominantly putting money on government securities? Of course, one of the biggest challenges is if you go, for example, to our stock market in Nairobi, the number of, we haven't had things like IPOs for quite a long time. So the number of securities which are available are quite limited. And pension funds are now beginning to even have a bigger problem. For example, the pension industry in Kenya, if I may put it, is currently on steroids, to the effect that the level of contribution has really gone up following a bit of reforms touching on the contributions which people are supposed to contribute out of NSSF reforms. So as a result of that, you find every time, for example, central bank auctions sells a bond, you find over 200% subscription. So they are technically awash with money. So this then means pension funds have to seek alternatives. And this is one of the things we've taken lead as one of the largest pension funds in Kenya by moving into alternatives. And allow me to acknowledge. Can you
give us some examples of some of the alternative investments?
Yes, that's what I'm moving into. So through our CPF Capital company led by my colleague Mercy, we've been able to roll out around 3 very interesting securities in the Kenyan market in the recent past. One is we've structured an asset-backed security for one of the largest stadiums, which is currently being constructed in Kenya, called Talanta, a $350 billion dollar investment, which if you look at the people who have subscribed into it, is actually one of the, basically the largest pension funds in Kenya. we've also been involved in setting up a real estate investment trust, one of its kind, the first ever to be listed at Nairobi Securities Exchange by a pension fund. And then over and above that, we have a Sharia compliant fund. So we've been able to list a Sukuk bond again at the stock exchange. So the pension funds have to remain creative. You looked at the statistics which were shown today by the former president of AFDB. 69% of the pension assets in Africa is actually concentrated in South Africa. The question you ask yourself is, where was the rest of Africa when South Africans were saving? And this thing of pension savings, I think, is beginning to gain momentum across the continent. And if you look at the largest pension fund in the continent, which is GPF from South Africa, they have allocated just a small portfolio of the assets into alternative asset, and they are doing quite significant investments across Africa. So this is the direction which I believe the pension funds need to go. They need to completely start thinking outside the box. For a long time, we've always thought and believed that government securities is risk-free asset. In fact, that is what books define. If you are looking for a risk-free rate, you look at what government securities offer. But I think what happened in Ghana has changed that kind of mindset, that government security is not necessarily risk-free, especially where the issuing governments have their fiscal challenges.
Yes.
Yeah.
No, absolutely, and thank you very much. So I want to go to Regis. Social securities funds are major investors in African markets. How do you manage exposure to global risk while ensuring sustained growth?
Thank you. First, congratulations to Celestin and his team for hosting such a great event and everybody to come. As far as RS is concerned, I think it all starts with a robust asset liability management framework as a basic. Generally, you look at your portfolio, how you manage, balance your risk, but I will only speak about RSSB and how we do it. Majority of our assets our investments is in Rwanda, and unlike many NSSF, when I hear my colleagues speak, it is true that many defined contribution schemes do invest only in government bonds. RSSB, a bit different. As a defined benefit, we actually are one of the drivers of our economy in terms of investment. About 50% of our assets is in fixed income, meaning the rest is actually in investments driving the economy. We employ over 7% of the directly and indirectly of all the jobs created in the country. So I'm saying this to say, from opportunity creation, you have to create the value you want to harvest in the end. So for us, we've decided just to continue to support Rwanda. We do manage our risk by diversifying. We invest in on the Kenyan stock exchange. We have a Pan-African fund, $250 million, investing in different assets across the continent. We're invested directly in some equities in Europe and the US, in technology, life science, the type of investment that could double the fund when they work out well with IPO. For instance, you might want to know that we are one of the investors in Zipline, which started here in Rwanda and is now a global unicorn worth over $4 billion. So we define ourselves as a catalytic investor. And while we also shareholders in RSC, but we position ourselves as how can we play a role that actually grow the market. And we're doing that in a few ways. One, there's investing. I think we are one of the participants in all the listed companies. Two, we significantly encourage the private sector to list. We've invested in an energy bond, we've invested in a green bond, we've invested in
how do you manage to encourage them to list? Because that's a challenge for everybody.
Yes, so
if you can do it, maybe exchanges can get a couple of...
We give incentives and we make it very easy or accessible. We have very clear list of criteria for you to be eligible. And we've pretty much participated in everyone who has listed, and great job done by the RSE. They have a pépinière, is that you call it? Like, you know,
Pépinière, it's
investment clinic.
Investment clinic. That
Yeah.
actually, and we've invested in 2 so far, and we hope really more. It's more of a signal. Number 3, what we are doing, we are launching in December an MSME fund, $30 million equivalent, and with a goal to grow it to 100 million. It's locally focused. That's this December. And the idea is to say, you know, it's a growth capital. How do we support companies to scale, which cannot grow from the lending rate of the commercial banks, and then get them to list, right? And then now opening up that pool to our members or the citizens. Number 4, around June next year, we are launching 2 new funds, one being an R&D fund and a women-led fund. The R&D fund is going to be from labs to markets. So all the startups, all the innovators, all type of industries, and then also for women-led businesses, which are starving for capital. And the idea is to say, to your question, how do we manage our risk, global risk, but focusing more on what we're doing to grow our markets. Okay. Also acting as an example of what we do. When we talk to our peers, which 80% or 90% of the assets are literally in government bonds, and we come up as a standout with how are we doing these things, but some things we must do because no one else will do it for ourselves. If you don't grow our private sector, which in Rwanda, our NS2, the 5 years Celestin was referring to, it will be a private sector-led economy. And our hope is that not only we can double the number of jobs created directly indirectly by RSSB to the high teens, maybe from 7% to 18%, having at least a dozen of numbers listed from these 3 funds we're going to launch. And also
what would be the timeline for listing from those funds that are going to launch? Which is the timeline based on the investment you have, actually, I guess, in your pipeline right now, versus the exit strategy via listing? What would be that timeline? For the companies to list? Yes. The sooner, for us, our goal, we want to make money, a lot of money for our members. So if you are here, so you know, we achieved about 15% ROI last year up to June. So your money is safe and productive. Number 2, so it's not cut in stone, but the idea is to say how to create the right environment. We have access to capital, but also actually availing resources, human capital. There will be a side bucket of money, $3 million, which is going to be hiring the best CEOs, the best CFOs, the best operating managers to come and run these companies, not your typical technical assistants, you know, proper. We get someone from wherever they are off the shelf and you bring them to run these companies, get them to be productive, and then our exit is on the market. So our goal is not to own these companies in perpetuity, but it's how do we enter, the risk, grow, and actually list so that you can open up this company. We've done this as an example. We sold the largest cement company in Rwanda. We entered around 2012, 13. We fixed it. It was loss-making. We fixed it, paid dividends, listed it around 2022, 23. We listed it, and then we exited it 2024 at a high profit. So we want to do many more of those. Yeah, we do need those, obviously, pipelines, as you know, Celestin said earlier on. You know, there's massive challenges around listing, not just in Africa, across other continents as well.